today. I know there were some questions submitted beforehand about a few other pieces of the stimulus bill. We won't be diving into anything besides PPP today, but definitely look for in the hopefully near future additional content from us on other pieces of the stimulus bill. So with that, we'll go ahead and dive in. I first wanted to just kind of go through some of our PPP1 stats. So we've got PPP1 and PPP2. That's kind of how I'll be referring to them. So just kind of a quick recap of what happened before. So in the first round, applications were accepted through August 8th, which now, my goodness, seems like eons ago. So no applications for new funding were able to be submitted since August 8th. So the money that was laid out to borrowers, so about $525 billion, was appropriated through that August 8th date. There were a little over 5.2 million loans that were approved, totaling that $525 billion. So you can, if you do kind of the quick math there, the average loan size was a little over $100,000 for that first round of funding. There was about $124 billion in that first round that actually went unspent. So that $124 billion got rolled into the second round of funding. About 87% of the first round of PPP loans were actually less than $150,000. That's kind of an important piece of information as we walk through some of the updated, the new rules that came out of the bill. And then as of November 22nd, which I realize is a little bit dated now, but this is the most recent available data from the SBA. There were a little over 595,000 forgiveness applications that had been submitted to the SBA, totaling about $83.2 billion. And of those applications that had been submitted already, a little over 367,000 of those had payments remitted back to lenders. So that means forgiveness, either in full or partial, was remitted to lenders, totaling about $38.4 billion. I do have some notes coming later on when we start diving into PPP2 that there are quite a few banks that have halted their loan forgiveness application process with the signing of the new bill on Sunday. Many banks just want to see what regulations come, what rules they need to put in place, if they need to make any changes or updates to their portal. So we have gotten word that at least a few banks so far have actually halted the acceptance of forgiveness applications right now. So if you are in the process or we're really anxious to try to get something in before year end, please make sure that you're reaching out to your lender to make sure that they're actually even accepting applications right now, because they may not be. So with that, we'll go ahead and just dive right in. So we're going to refer to this as PPP2 since it's kind of the second round of funding for, technically it's the third round, but we're going to call it the second round of funding for the PPP program. So in the CAA, Consolidated Appropriations Act, there was $284.5 billion allocated to the second round of PPP funding. If you recall just a moment ago, there was about $124 billion that had remained unspent from the first round. So we've got about $160 or so billion in new funding for the second round of PPP money. One of the biggest issues that I wanted to make sure we highlighted right away, this was something certainly as a CPA firm, we've been kind of sitting on the edge of our seat waiting for this information as we tried to help clients with year-end tax planning and looking towards filing a tax return for 2020. This was huge. The bill that was signed into law did confirm what we all expected Congress's intent was with the first round of PPP, that we are actually going to be able to deduct the expenses that were forgiven under the PPP loan. So the technical reading says deductions are allowed for otherwise deductible expenses paid with the proceeds of a PPP loan that is forgiven. So that is very different from what we were saying 2 months ago when we last met, and what we said maybe in a webinar or two leading up. The Treasury had put rulings out that said the expenses were not going to be deductible, but the bill that was just signed into law does overturn that. So for anybody that was doing some constructive tax planning, doing some scenario planning, you can now go to the scenario where those deductions are allowed. If you've gotten the loan forgiven, or if you anticipate that the loan will be forgiven, you will be able to deduct those expenses. If you're a fiscal year, if you're a calendar year, it doesn't matter if you've already had the loan forgiven or if you're just in the process. It's all retroactive, essentially back to the date that the CARES Act was signed into law, which was back on March 27th. So I put that note in there just to make sure that everybody is clear. So even if you already have achieved forgiveness, this still applies to you. It applies to everybody that's received a PPP loan, either in the first round or if you get a PPP loan in this new round. And then there was just additional clarification, although this was something that we already knew. They did clarify that gross income does not include any amount that would otherwise arise from the forgiveness of a PPP loan. So basically, any of your PPP loan that is forgiven will not be included in gross income. For tax purposes, it will also, you'll see as we continue along in the presentation, that it also won't be included in gross receipts if you're doing a revenue test to determine if you're eligible for a second PPP loan. So that's important as well. So this was huge. Hopefully a few people on the line are doing a little happy dance about this, because this was a big one for us in the accounting and tax world. So let's go ahead and talk about the additional funding. So that $284 billion is allocated to go a long way for a lot of different businesses. So we have two different categories of potential borrowers for this additional round of PPP funding. The first one I'm going to highlight are those that are first-time borrowers. So these are people that either decided that they didn't need the first round of PPP money, or perhaps weren't eligible. As you'll see here, I've highlighted some new eligibility requirements that it opens it up for additional borrowers. There's $35 billion allocated specifically to first-time borrowers. So the eligibility requirements are that you have to have 500 or fewer employees, and you have to meet the definition of a small business as it relates to the SBA, which if you have 500 or fewer employees, that's one of the requirements. And then there is an income threshold, which I think probably most of the people on this call are going to meet that threshold. It's also open to sole proprietors, independent contractors, and those that are self-employed. So people that file Schedule C, people that file Schedule F, all are eligible under the first-time borrowers. Businesses with the NAICS code starting with 7.2, which are typically think restaurants, hotels, anything in the food and accommodation services. If you have multiple locations and you have 500 or fewer employees at each physical location, you are eligible for a PPP fund or a PPP loan. Nonprofits continue to be eligible, and that includes churches. So I know we've got quite a few churches on the call today. So you are eligible if you didn't apply in the first round. And then what's new, again, another pretty big deal. I know here at Wegner, we've got a lot of clients that this will apply to. So new eligible first-time borrowers are 501c6 and destination marketing organizations. There are a few other eligibility requirements for those types of organizations. They do have to have 300 or fewer employees as opposed to that 500. And they are subject to lobbying thresholds. So if your 501c6 has more than 15% of your gross receipts or activities, or you have more than $1 million in lobbying expenditures, you actually will not be eligible for a PPP fund. So you need to be kind of double checking what your lobbying expenditures are before you apply, because there are certain thresholds that you have to be under to be able to be eligible for a PPP loan. They did open it up to certain news organizations and also housing cooperatives. So those were 3 types of organizations that were not eligible in the first round. And due to quite a bit of lobbying and getting out in front of Congress and your state lawmakers, these organizations will now be eligible for a first PPP loan. The second group of people that are eligible for the second round of PPP funding are those that had already received a PPP loan in the first round. So we're calling these the second draw loans. There are a few more restrictions related to taking a second PPP loan. Those include, similar to that 501c6 threshold, you have to have 300 or fewer employees. Now, again, this is if you received a PPP loan the first time, and now you need a second PPP loan. You have to have 300 or fewer employees. You need to show a 25% gross receipts decline in any 2020 calendar quarter. It appears to be, although that will be confirmed, but it appears that it's based on a calendar quarter. So January, February, March is quarter 1, etc. You would need to compare your gross receipts in any calendar quarter of 2020 compared to that same quarter last year. And you'd have to be able to show a 25% decline in gross receipts. Now, this is still a bit of an open book. I want to remind everybody that this information that we're providing you is based on the legislative text in the bill that was just released the bill was released a little over a week ago. Now that the bill is signed into law, we will be anxiously awaiting what are called interim final rules and regulations and frequently asked questions that will answer a lot of the kind of open items that we have. So the information that we're providing is strictly based on the legislative text that's available, and it's not going to be able to fill in all the gaps quite yet. There's going to be a lot more information that comes out over the next few weeks. And continue to keep an eye on things with us as we'll continue to roll that information out as we get it. So this 25% gross receipts decline, right now, I have a note at the bottom, is it cash? Is it on a cash basis or an accrual basis, or either? We don't have an answer to that yet. We'll need more information. Obviously, that can make a huge difference if you're reporting on the cash or accrual basis, if you can switch between the two, if you can choose between the two. That could make a pretty substantial difference in the way that people will be calculating that decline in gross receipts. And it is our understanding right now that if you have a decline in gross receipts of 25% or more in any one quarter, even if you don't have a decline, let's say you had an increase in gross receipts in all other quarters except one, if you can prove that you had that decline in at least one quarter, you will be eligible for the second round of PPP money, as long as you also meet the other criteria that you have 300 or fewer employees. There will likely be some sort of certification or attestation similar to the certifications that were made on the original loan and on the forgiveness application, where you'll need to certify that you had this gross receipts decline. And we are still waiting on information that you would need to provide to substantiate that information. But this is what this is the information provided in the legislative text. The EIDL grant and PPP loan are not going to be included in gross receipts. So if you received the EIDL grant, which for anybody that did or did not receive it, that was a grant that was available to anybody that applied for the EIDL loan. It was a grant of $1,000 per employee up to $10,000. Just a side note, again, we're talking specifically about PPP today, but mentioning the EIDL grant, there was more money allocated to the EIDL program. So that grant program will actually be reopening. Don't have any details on that in this presentation, but just wanted to make sure everybody knew that that was going to be available as well. But the EIDL grant and any PPP loan that has already been forgiven would not be included in that gross receipts calculation. To get a second draw, you also will have to have used or can certify that you will use the full amount of your first PPP loan. So if you'll remember, if you have a PPP loan, originally you had to use all of the funds to be eligible for forgiveness by the end of this year. December 31st was kind of that final usage date. That has been extended to March 31st. So if you received a PPP loan towards the end of that period, maybe closer to August 8th, and you were using the 24-week period, before it had to be the 24-week period or December 31st, whichever was earlier, that period has now been extended to March 31st. So if you're still using that first PPP loan you got, you have actually until March 31st now to use those funds and still be eligible for full forgiveness on that loan. I know I saw a lot of these questions that were submitted beforehand. So I do want to remind everybody that borrowers are eligible for second loans, even if they have not yet received forgiveness on their first loan. So again, it will be a series of certifications and attestations that you'll have to sign off that you either have used or you will use the full amount of your first PPP loan. But if you haven't quite used the full amount of your first PPP loan, it appears that you will still be eligible to apply for a second loan. Again, even if you haven't used it in its entirety, or if you have yet to apply for forgiveness.
Kate?
Yes.
My understanding was the PP1 had to be fully used and forgiven to apply for a PP2.
Nope. It does not have to be forgiven, and it doesn't have to be fully used. So you'll need to make it will likely be a certification that you will use it. But I've sat through a couple different webinars over the last 2 days that you don't have to have achieved forgiveness on the first loan to be able to apply for a second loan.
Okay, because I've got contradictory information on that one.
Okay. Yep, and we can look into that. So that's coming from the AICPA and webinar that I sat on just this morning, that you will not need to apply for forgiveness and have forgiveness achieved. And that would make sense because a lot of banks are going to be closing their portals at this point, awaiting new guidance before they reopen their portals for forgiveness. So the likelihood at this point of having your loan forgiven prior to the loan process opening up for a second loan, the timing is likely not going to work out. So you would have a lot of people that haven't applied for forgiveness on their first loan yet when the second round opens up, which if they weren't eligible to apply for a second one, if they hadn't achieved forgiveness, they're going to have some big issues there. So we can certainly clarify that. But I feel pretty comfortable with the statement that's on your slides here, but we can certainly look into and follow up and send that out with the email when we send out the PowerPoint.
The other question that is coming up in several cases here, can you address what happens if you weren't in business in 2019?
Sure. If you weren't in business in 2019, you are going to be able to look at a calendar quarter in this year. You have to have been in business as of February 15th of this year to be eligible for a loan. So if you're a brand new business, let's say you opened up a new business in June of this year, you will not be eligible for a PPP loan for either a second draw or a first-time borrower. You had to have been in business as of February 15th of 2020. If you are going for a second draw loan, and you started business at the beginning of this year, so you were eligible for that first round, and you are looking for a second draw loan, I believe there's going to be a way to compare potentially the first quarter compared to maybe the last quarter. I think that's one item that we'll need clarifying guidance on. The only specific guidance that we have right now is that you had to have been in business as of February 15th of this year to be eligible for a loan at all. But I think that's going to come from clarifying guidance that we get down the road. Anything else, Melody? So as important, that was a perfect lead in. Ineligible businesses for either a first draw or a second draw are businesses that were not in operation as of February 15th. So again, if you just started, if you opened up a brand new business, number one, congratulations. That's pretty exciting. But unfortunately, you aren't eligible for a PPP loan if you weren't in operation as of February 15th. Lobbying organizations, so typically that's going to be like a 501c4. Those are still not eligible. Publicly traded, if you were paying close attention to the news when the PPP first rolled out, there was quite a lot of drama over some publicly traded organizations that had gotten PPP loans. So what they've said in this round, our publicly traded organizations are ineligible. And then another important piece of the legislation was the shuttered venue operator grants, which again, we're not going to go into depth on in this presentation, but we wanted to make sure that you knew that if you do qualify for a shuttered venue operator grant, you will not be eligible to receive a PPP loan. So you'll want to kind of weigh the benefits of which one is the right, which is the right way to go, whether getting the grant, the shuttered venue operator grant, or getting a PPP loan makes the most sense. So certainly be looking into that. But I believe there was about $15 billion that was allocated just specifically for that shuttered venue grant program. So let's talk a little bit about the loan calculations. So they're going to be pretty similar to the first round. It's 2.5. Oh, yep. Go ahead, Melly.
Sorry, can I interrupt you one more time? There's another common question that is coming up here.
Sure.
About, that it's the gross receipts, there's not net, correct? And that it has to be all receipts. You can't just carve out one type, like one business line or one type of grants or contributions.
That would be my assumption. However, again, this is, we're going to get a lot more clarifying guidance over the next few weeks. So I don't have a clear answer for that at this time. But I would expect in the next week or two that we should have a lot more answers to questions like that. My gut would say that you won't be able to carve out certain receipts to be able to try to meet that test. Basically, what's not going to qualify as gross receipts are going to be that EIDL grant and your forgiven PPP loan. My guess is it's going to be difficult to carve out any other pieces to achieve that gross receipts test. But at this time, we don't have final clarifying guidance, but we expect to receive that in the next few weeks. All right, so loan calculations, again, similar to the first round, you're going to be able to apply for 2.5 times your average monthly payroll costs. There are some caveats for this. In the first round, essentially everybody used their 2019 payroll. If you were in operation only at the beginning of this year, you could use the first 2 months of your payroll to do this calculation. With this round, you can use the 12 months prior to the application, or you can go back and use your 2019 payroll. So it really depends on how your business has fared. For most organizations that need a second round of funding, it's likely that you're going to want to rely on that 2019 payroll number. If you are applying for the first time and your year has not been horrible, and maybe your payroll costs have increased a little bit this year, it may be more advantageous to use the 12 months prior to the application. So you do have some options when calculating, but it's still going to be 2.5 times your average monthly payroll costs. For seasonal employers, this is similar to the first round. You can use any 12-week period between February 15th of 2019 and February 15th of 2020 to do that calculation to get your average monthly payroll costs. New for this round is that the maximum loan amount is $2 million. In the last round, it was $10 million. So they've lowered that substantially. A big piece of new information is that businesses with the NAICS code starting with 7.2, so again, that's our food and accommodation services, restaurants, hotels, they can actually borrow 3.5 times their average monthly payroll costs. This is obviously being done because the food and accommodation services industry has been certainly hit some of the hardest out of everybody. So they are allowing those businesses to take a little bit extra, 3.5 times their average monthly payroll costs, as opposed to 2.5 times. You will have to certify again that you have an NAICS code that starts with 72. That information, you should be able to find that on your tax return. So if you've got your 2019 tax return, it should be on the front page. You can determine what your NAICS code is. Also new for this round, specifically for Schedule F farmers and ranchers, you will be able to use gross income instead of net income to calculate your owner compensation replacement. So I'm not going to go too far into the details. I'm sure we'll do another webinar closer to the time when the application process opens in regards to calculating how much loan you can receive. But for any Schedule F, you were able to before use your net income as a owner compensation replacement dollar amount. So for going forward, this is for Schedule F farmers and ranchers only. You will be able to use gross income instead of net income to calculate that piece. So let's talk a little bit about eligible costs because there were pretty significant changes here, some new updates. The changes in eligible costs apply to all PPP loans unless you have already achieved full forgiveness. So if your loan forgiveness application has already been processed through your bank and through the SBA, and the SBA has remitted the funds back to your lender, that means your PPP forgiveness process is essentially closed. And these new costs will not apply to you. It shouldn't matter much if you've already achieved forgiveness. But if you haven't applied for forgiveness yet, and maybe you weren't able to use all of the funds, or if you're thinking about applying for a second loan or a first loan, this opens up the option to use the funds for a few new purposes. So the items where there was no change, still we've got our eligible payroll and non-payroll costs, which included the gross payroll. That includes bonuses, hazard pay, tips, holiday pay, any of your normal day-to-day pay. It excludes wages paid under FFCRA. So that's the Families First Coronavirus Response Act. That was a family sick and medical leave as it relates to COVID, and wages in excess of $100,000 on an annualized basis. That's the only pay it excludes. It includes the employer portion of health insurance and retirement, state and local unemployment taxes, rent and mortgage interest on real and personal property, and certain types of utilities. What's new under the eligible costs, they've now opened up that health insurance to now include group life and disability insurance. And they also clarified that health insurance does absolutely include dental and vision. So there were still, I think that had been clarified in a frequently asked question maybe a few months ago, but they have re-clarified that it does include dental, health, vision, and now includes group life and disability insurance. You can now also use the funds for worker protection. So PPE, personal protective equipment, for your employees, and costs to comply with any health and safety guidelines as it relates to COVID-19. So if you're putting in if you're putting up shields, so like many grocery stores had to put up shields for their workers, putting up hand sanitizer stations, providing masks and or gloves to patrons, to their workers, all of that, the PPP funds can now be used for those reasons. Supplier costs are another big piece. You may think of this as kind of the cost of goods sold. This is probably most important for like restaurants, again, who are buying food and supplies. It's basically going to cover essential expenses to the borrower's current operations. So that's why I put cost of goods sold in parentheses. That's typically what we would think of as a supplier costs. And the last piece that's new are property damage costs. So costs related to 2020 public disturbances not covered by insurance or other compensations. This came out of some of the rioting that had occurred, and there were damage to businesses. And so if things weren't covered by insurance or other compensation, businesses can now use PPP funds to cover some of those property damage costs, again, that weren't already covered by another insurance or other compensation. So this is pretty huge. It obviously opens up a lot more opportunity for using the funds for different purposes. What I do want to stress is that to achieve full forgiveness, you do still need to think of the 60-40 rule. So this is similar to what we got after the Paycheck Protection Program Flexibility Act back in June. To be able to achieve full forgiveness, 100% forgiveness, you need to use the PPP funds for at least 60% on payroll costs. So that's the gross payroll, employer portion of health insurance and retirement. So you want to make sure that you're still thinking about that. So if you're taking out a PPP fund, for example, just to cover property damage costs, you are going to have to pay back a portion of that PPP loan. So you want to still be thinking about that 60-40 if you are looking to achieve full forgiveness as it relates to the PPP loan. Any questions, Melody, that I need to address for that piece?
No, there's plenty of questions, but I'm not concentrated like my previous interruptions.
Okay. So there is one item, if you notice, I highlighted on this slide here, excludes wages paid under FFCRA. Wanted to draw attention to this because certainly as we have been working with all of our clients over the last few months and starting the loan forgiveness application process for many of our clients, I wanted to stress the importance of the FFCRA wages. So I've included a slide here. These are screenshots from a Form 941, which is a quarterly payroll tax report. This is where you report your Social Security and Medicare wages and pay and report those tax liabilities. FFCRA was enacted under the CARES Act back in March, and it allowed for some extended family and sick leave surrounding reasons that relate to COVID. You have COVID, you're caring for someone with COVID, there's a lack of daycare because of COVID. There's, I believe, about 6 different reasons that you could be take a leave under FFCRA. Those wages are eligible for a specific credit on your 941. So as it goes with all of the credits and provisions that have been enacted under the CARES Act and now the Consolidated Appropriations Act, they are pretty strict about not, as we call it, double dipping. So essentially getting a double benefit from any one of these provisions or credits. FFCRA is a really valuable credit that we want to make sure people are taking advantage of. I believe it's almost a dollar for dollar credit that you'll see on your 941. It's essentially going to reduce your 941 liability. And so you want to make sure that you are that you understand FFCRA and how to pay out those wages. And it's important if you're looking at your 941, I've highlighted the boxes that you should have information and you should see numbers in these boxes if you have separated out your FFCRA wages correctly. If you're working with Wegner or if you're working with any other accountant or you have an in-house accountant who is applying for your PPP forgiveness, those wages have to be separated out because again, you can't take a double benefit. If you are getting the credit for paying out FFCRA wages, you have to make sure that you can separate those wages out so that you're not applying for PPP loan forgiveness using those wages. So I just wanted to make sure that everybody is aware of FFCRA. If you're not aware of it, if you're not familiar with what it is, and you think that you've had people out that were that may fall under those COVID categories, make sure you reach out to your payroll provider or your accountant and talk through that scenario with them. We've already had a couple of clients who have to now go back and break out those wages because they didn't know that they had to have a separate pay code for those wages. But that's going to be really important because double dipping is definitely a big no-no. And if you're working with us or with any other provider on your loan forgiveness, they are going to ask those questions. Did you pay any of your employees under FFCRA? And if so, we need that breakout. So I just wanted to make sure everybody kind of had a visual on where you would see FFCRA, the Families First Coronavirus Act, and where you would be looking for the numbers related to those credits.
Before you move on, Kate, there are a couple more questions that are centered around a similar vein here.
Okay.
Which you covered earlier with the PPP costs. Is there a certain time frame that those are eligible for, and can it be for things like the air filtration system, something that's not a temporary?
So that's going to be another one that we'll get a specific clarification on when we get some regulations. My best guess is going to be that they're going to need to be costs incurred in the covered period. So as it appears right now from the text that we have, the covered period is going to be anywhere between 8 and 24 weeks, but I believe the start dates are going to be similar to the first one. So that start date of your covered period is going to be the day the funds are dispersed. So if you are putting in an air filtration system and it's related to complying with health and safety guidelines, it may be eligible, it may not. We'll have to wait on guidance there. But the likelihood is that you're going to need to incur that cost in your covered period for it to be eligible, if it is eligible.
One other quick question. I don't know if both the people asking and myself missed it, but did you give us an idea of when the second round applications can start to be submitted?
I'm going to get to that in a couple slides.
Awesome.
All right. So another huge update is simplified forgiveness. So again, if you work with Wegner, anyone at Wegner, hopefully they have reached out to you or are in the process of reaching out to you. If you received a loan of $150,000 or less, we did finally get guidance that we will have a simplified process for that. Back in October, the SBA had released a simplified form for borrowers that received $50,000 or less. That will now be, we will likely get a brand new form for this simplified forgiveness, but it will be for loans of $150,000 or less. The law states that it's going to be a one-page form. Again, they're big on the attestations, so you're going to have to certify that you complied with all of the requirements. It's going to ask for your loan amount, the number of employees that you retained, an estimate of your loan spent on payroll. So I believe that is going towards that 60-40 rule, making sure that you spent at least 60% of the funds on payroll. And then there is potential that you may need to provide documentation to substantiate a loss of revenue. That, again, this is straight from the text. We will get more clarification on these pieces, but we just want to make sure that that everybody has the information that we have right now. So details will be forthcoming, but right now this is what we're looking at for simplified forgiveness. The SBA has 24 days to come out with this form since the bill was signed into law. So that was Sunday night. So they've got a little over 3 weeks to produce a form for this simplified forgiveness. So if you are in this bucket where you got $150,000 or less, and you were rushing to try to get the loan forgiven, let's say before the end of the year, our advice would be pump the brakes, hold off, wait for this simplified forgiveness to come out, because it's going to be a one-page form, and you're not going to have to do any of the FTE calculations or wage reduction calculations. It's just going to be a one-page simplified form. So if you're in that group where you got that dollar amount or less, hold off on applying for forgiveness. Some other important updates that I just wanted to touch on. This was one that there was kind of an assumed assumed piece of information that we never really got full clarification on. Prior to the bill signed in on Sunday, there was still kind of this idea of 8 or 24 weeks as your covered period. And there were some rules based on when you had gotten your loan. If it was before June 5th or after June 5th, you could choose, or you were automatically in the 24 weeks. However, you could still apply even if you had used the funds, let's say in 16 weeks. Now they have defined that a borrower can actually select their covered period between 8 and 24 weeks. Again, I want to clarify that we believe that the start date of the covered period must still align with the disbursement date, or if you opt into the alternate payroll covered period date. You aren't going to be able to choose any 8 to 24 week period. You'll have to still, it will be aligned with your disbursement date or close to that. But if you use all the funds in 10 weeks, that's your covered period. If you use them in 15, that's your covered period, et cetera. Excuse me. So that's something new that we got absolute clarification on. I had mentioned earlier that funds can now be used through March 31st. If you got that, like let's say you got a loan the beginning of August, maybe end of July, and you needed that 24-week period, that would push you into 2021. And prior to the new bill, you would have had to use those funds before December 31st to have them all forgiven. Now you have through March 31st. Another big piece of information was the EIDL advance. Originally, the EIDL advance was set to reduce the amount of PPP forgiveness you could achieve. So if you received a $150,000 PPP loan and you got a $10,000 EIDL advance, even if you use the PPP funds entirely for eligible purposes, you didn't reduce FTEs or your wage or salary, you would still need to essentially repay the EIDL advance via the PPP loan. That goes away now. I put a note here that we are waiting on additional information for anybody that has already received forgiveness notification, and you receive notification that you do have to pay that EIDL advance amount back. They're likely going to make adjustments. Banks are going to have to adjust to retroact the fact that that will now not reduce your PPP forgiveness. So, excuse me, that's retroactively in effect. So if you have already gotten forgiveness and part of your forgiveness was denied because you got that EIDL advance, that should change, but we're waiting on additional information to find out how that's going to change. I did also mention about the shuttered venue operator grant. You cannot receive both that grant and a PPP loan. So once we have more information about how the shuttered venue grant program is going to work, it'll be important to take a look and analyze which one is going to make the most sense for your organization if you are eligible for both. Another new piece of information is the employee retention credit. So prior to this bill, the employee retention credit and the PPP loan were, as I would call them, mutually exclusive. You couldn't take one if you got the other. At this point, we do have information that the employee retention credit will be able to be taken along with the PPP loan. You'll just have to make sure that different wages are used for each. The employee retention credit is another credit that's calculated on the Form 941. The likelihood is you're going to have to use different periods. So you're going to want to really think about what period you are going to use all your PPP funds in. The employee retention credit has been increased substantially with the new bill. So again, you're going to want to make sure that you talk with your accountant. We're not going to go into the employee retention credit in this presentation, but it is a pretty valuable credit. It was valuable before, and it's even more valuable now. So you'll want to make sure that you understand that and do some planning to see how you can, if need be, how you can use both and be effective.
Okay, before you go to the next slide, can we go back correct, the one before on the simplified forgiveness. Can you just clarify that last point about needing to provide substantiation for loss? Because that does not mean that you're not able or subject to forgiveness, and it doesn't imply PP1 versus 2, correct? There's some
Correct.
that.
Correct. There was just some wording that made it seem as though there may be some sort of requirement that you need to show that you had some sort of loss of revenue to make sure that your loan can be fully forgiven. We're going to need more information on that. This was about as much information as we have. May need to provide documentation, but we don't know for sure yet. Again, all of this information is strictly based on the legislative text. After the first bill, the CARES Act, came out, Melody, maybe you remember the numbers. I think we had upwards of 25 or 30 interim final rulings, which were regulations that ranged anywhere from 3 to 20 pages each. And we had a total of about, I think it was verging on 80 or 90 frequently asked questions, which was probably between 20 and 30 pages worth of frequently asked questions. All in all, I think it's over 300 pages of additional rules and regulations, clarifying guidance that came out after the actual bill was signed into law. So that's what we're going to be anticipating. That's what we're waiting for. None of that has come out yet. I'm sure some of it has been in process since the bill passed through Congress. But since the president just signed this into law on Sunday, there's going to be a time period where we're waiting for some of this clarifying guidance. So a lot of these are great questions. They're questions that we have too. But unfortunately, we're just going to be waiting on some of those answers until we get some of those rules and regulations. But keep those questions at the front of your mind, because the likelihood is most of them are going to be answered hopefully in the next week or two.
Well, and just to clarify that there was a lot of confusion in addition to what you were talking about with the frequently asked questions and IFRs, that this second bill that includes the PPP2 actually has a caveat for those who return some of their funding because of the many unknown questions and things that needed to be clarified the first time around. So it's not been an easy process by any stretch of the imagination. And we're going to have some things here that can't be clarified yet either.
Absolutely. Yes. That's a great point. Yeah. I mean, there are still outstanding questions from the CARES Act that even with this new bill signed into law, they're still outstanding. So it's a big piece of legislation, and it's not just the PPP. As many of you know, you're utilizing things like the employee retention credit or the EIDL program. There are so many different moving pieces. This is just one. It is a big piece of it. It's about almost a third of the entire stimulus package. So it's a pretty big chunk, but there are so many moving pieces, some of them, how they all work together. So it's important to keep attending our webinars and reading our blogs so we can hopefully get you information, get out information to you as soon as we have it and keep you up to date. All right. So what's next? The SBA has 10 days once the bill was signed into law to issue the processes for the second round of PPP funding. So essentially that puts us at January 6th. Will the holiday factor in? Potentially. I would not be surprised if it didn't, but we are looking to likely start seeing process and procedures. So some of these clarifying guidelines coming out, my guess would be towards the middle to end of next week, hopefully is when we'll start to see things. The banks are obviously going to need to update their systems to begin accepting loan applications again. So remember, just check with your lender, check with your banker. It may be that they aren't accepting any loan applications at all right now, the forgiveness applications. So before you rush to do anything, just check with them to see if they're actually accepting it. Most banks have portals, but they'll likely need to do some updating to comply with this second round. Just like we were talking about the interim final rules frequently asked questions will need to be issued by the SBA and the Treasury to get us answers to all of these great questions that you guys have and that we have. And regarding that simplified form, the SBA again has 24 days, so about 3.5 weeks to create that new simplified form for loans of $150,000 or less. And as a reminder, we recommend to hold on applying for forgiveness if you did get a loan under that threshold. And I have seen for sure at least 3 banks that have sent emails to their borrowers letting them know that they have halted their forgiveness application process and they aren't accepting any applications until they've gotten further guidance. So with that, we've got about 5-7 minutes to spare. I've got links to some of what I think are the best resources. Wegner, we have our COVID-19 Resource Center. And then the site that I'm on every day is the SBA.gov website. They're pretty good about putting the most up-to-date information as soon as they have it. So that's a great place to find all the frequently asked questions that have already been issued, all of the interim final rules, any procedural notices, the forms. The SBA.gov website will have all the most up-to-date information. And with that, Melody, are there any questions that we can answer in the last few minutes here?
Yeah, there's a couple. In terms of the employee retention credit, are we pretty confident we'll be doing something on that in the near future? Because
I think so.
About that.
Yeah, I think ideally, you've probably gotten familiar, probably already familiar with Melody's face since she does a lot of our webinars here at Wegner. But if you've been attending our PPP ones pretty regularly, then you may be familiar with my face at this point too. But we hope to maybe put a series together over the next month or so that kind of talks about how some of the different pieces of the stimulus bill interact. So it won't just be PPP focused. And my hope is that we'll probably have a webinar about some of the other parts of the stimulus bill as well. So yes, definitely expect to see some more webinar offerings in the near future.
And then to go back to the EIDL grant, because that came up a lot, that does not need to be repaid, correct?
Correct.
From what I understand, it may take the banks a while to sort that one all out.
Correct, yes. So the EIDL grant program is reopening, so that the EIDL grant program had run out of funding. There was a specific amount of money allocated to the EIDL grant and the EIDL loan program. The grant money ran out of funding, I think that was back in the summer. In the new bill, there was another dollar amount allocated specifically to the EIDL grants. So that again was a grant and loan that you applied for directly through the SBA. So you went to the SBA website and applied directly on their website. You don't go through a lender to apply for that money, but the grant program will be reopening. I don't have a date as to when that'll be reopened. My guess is they're going to prioritize getting the PPP process set up first, so that they can roll that out, and then the EIDL grant, my guess is would follow shortly after.
Self-employed, is self-employed just eligible to the same criteria for PPP2 that you've listed?
Yes. So self-employed, it depends on if you have employees or if you are just a single owner and you don't have any employees. The criteria for applying for a loan, let's say you file a Schedule C and you have no employees. You had to have made a profit in 2019 to be eligible for a PPP loan. I would recommend going back to a few of our past webinars, which are available on our website, probably maybe back towards June when we had done a few where we talked about applying for the loans. But you are eligible to apply for a loan if you file a Schedule C, you have no employees, there's no payroll, there's just a different calculation. It would be based off of your net income. And again, you have to have made a profit. You have to have had a net income. So if you broke even or had a loss in 2019 and you did not have any employees on your Schedule C, then you are not eligible for a PPP loan.
Another question clarifying on the forgiveness for the 150 and lower.
Mhm.
If you did reduce headcount, then you cannot use the simplified form, correct?
So that doesn't appear to be the case. So it looks like the simplified form for $150,000 or less is going to be general across the board. It's not going to matter if you reduced FTE or cut salaries or wages. It looks like it's just going to be similar to the simplified form we have for those that received $50,000 or less. It's just going to be a one-page form. Did you use the money at least 60% for payroll? If you did, you're going to be able to achieve forgiveness. So it's going to be a form for anybody that got a loan of $150,000 or less. All encompassing.
I think that takes care of the majority of our questions. Obviously, we can't get to all of them, but we so appreciate you sharing your expertise and answering as many questions as we could.
Absolutely. All right, Emily, should we wrap things up here?
I think so. Thank you all so much for taking the time to join us today. I know that there was a lot of questions still submitted, and we'll do our very best to get to everybody in the next coming days. Keep an eye out for an email from us, and you will receive the recording from today along with the presentation. Melody and Kate, as always, thank you so much for your expertise, and we'll be hearing a lot more from you in the coming weeks. So thank you all again for your time today, and I hope you have a great rest of your day. Thanks, ladies.
Thank you.
Thank you.
Bye.